Very much. Right now, we've got Pfizer, also a big winner today, going on some of the winners, but this certainly has to stand out on better than expected first quarter results. Also raising guidance for next year. They always love it when you do that. One of the rare success stories in an otherwise down market. Meanwhile, this whole issue of Puerto Rico continues to cast a cloud over maybe our markets as a whole, but does it have to when it comes to bailing out Puerto Rico? Maybe we're missing something here. So far, we haven't seen any negative effect on the overall municipal bond market. The feeling seems to be that if Puerto Rico essentially went kablooey, then anyone investing in anything public would go kablooey as well. Swiss American Trading Corporation Chairman Craig Smith, not necessarily. Craig, what do you see the extreme fallout here if Puerto Rico goes belly up?
Well, obviously there would be implications, but there'd be a lot of people that lose money. And quite frankly, Neil, I have no sympathy for the people that do lose money. I mean, look at the hedge fund managers, the mutual fund managers, the private investors, the bond insurers that basically took advantage of 8% interest rates, right, tax-free, no federal, state, or local taxes. And look, they took a risk, Neil. They bet on this. They bet on the Commonwealth of Puerto Rico, and unfortunately, their bet didn't pay off. Now they need to sit down with their creditors and figure out how they're going to work a bailout. And to ask the Congress to do this, I mean, come on, Neil. Congress can mess up a one-piece puzzle. Now we're going to have them micromanage Puerto Rico, for Pete's sakes. This is insanity at its max.
What is wrong, though, Craig, with just letting Puerto Rico do what a lot of U.S. companies do when they're in trouble? What individuals can do, well, even though it's harder these days, claim bankruptcy, prioritize your debts. If you're out, you're out. But that's something that taxpayers would not be on the hook for.
Exactly right. Especially in a political season, this is suicide for Paul Ryan. But let's talk about why Puerto Rico can't do that. Puerto Rico is a commonwealth, therefore they don't have access to the federal bankruptcy courts. However, why doesn't Paul Ryan put together a quick bill and allow them access? That way they can do what most people do when this happens, Neil. You sit down with the hedge fund managers, all the mutual fund managers, the investors, the bond insurers. You sit down and you say, hey, how are we going to work this out? How are we going to take the revenues we have? How are we going to reduce our spending? How are we going to reduce the benefits? Neil, out of the 3.5 million people that live in Puerto Rico, 60% of them get some type of government goodie every month. Maybe that needs to be looked at. And what you do is you work it out like you traditionally do in any business. This is a great petri dish, Neil. Puerto Rico is a great petri dish for an experiment in free markets, because when they happen, they work, Neil, and Puerto Rico will work their way through it. Look, we saw Detroit file bankruptcy in 2013. They're still around. You saw Orange County do it in, what was it, 2009. I mean, I can give you San Bernardino County, Jefferson County, Louisiana. The list goes on. And what my big concern is, Neil, is if Congress gets involved, there is $3.7 trillion worth of municipal bonds that potentially could all be looking for the government. And during this political season, does Paul Ryan really want to send the signal to the American people who are incensed to begin with over this issue that Congress will bail out investors again from Wall Street in Puerto Rico? I think not, Neil.
Very good point, because when push comes to shove, any investor takes that risk when he or she invests. And if it sounds too good to be true, as it was with 8% Puerto Rican debt that was largely tax-free, then it is. But to say that you're going to sooner protect those investors than average taxpayers, you're in the tank for the wrong folks. But well put.
You bet. And Neil, keep in mind, I know we're short on time, but keep in mind, there are a lot of hedgers that were talking about this the end of last week, that they were going to go in and not on the general obligation bonds, but on the other bonds, we're going to go in and try and buy them at 30 cents, 20 cents on the dollar, knowing that if the government came to the rescue, they'd be made whole.
That's
and
exactly
they would make
right.
fortunes. Neil, it shouldn't work that way.
No. And by the way, anything that does that is about to investors and not the people who need it. Craig, thank you very, very much. All right.